Hello everyone, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just keep in mind that obviously there's risk involved with trading and you want to manage risk in a way that makes sense with each trade that you take. And there's no guarantee of profit, so you want to make use of the risk management tools that are found if you're using our web trader or our app right within the order window that help you to calculate exposure amount, potential profit, etc. And we'll go through some examples of how to do that if we find a trade or two maybe to simulate. Also keep in mind that what we go over is not meant to be financial advisement, but it's coming from an educational perspective. Now from our main website, we can go ahead and log into the web trader platform, which allows you to trade on both MT4 and MT5 accounts from the same location. And with the advanced functionalities that are offered within the web trader, it's the same tools you see in our app as well. So if we log in the upper right hand corner here, we'll find ourselves in the web trader platform. Some big headlines that we could talk about from a fundamental news perspective that are going on right now before we take a look maybe at some economic announcements that occurred yesterday and some that are coming in today. There seems to be the negotiations between the US and Iran regarding Iran's nuclear program. Things seem to be coming to a head maybe here sooner rather than later. Conflicting headlines today about whether there will be talks, a sixth round of talks. I think it's the sixth session that they're on. Coming up, whether there will be talks this coming Sunday or not. The initial reports were that the talks were off. Then reports came in that they're still planning to talk on Sunday. But with each headline comes more and more fear that there may be a war breaking out between Iran and Israel, and perhaps the U.S. being involved as well, and who knows what other allies on the NATO side, or I know in the past conflicts that were occurring in the same region, it also included France and Great Britain and others that were helping from a defensive posture to knock down missiles. So I know Great Britain put out a warning about shipping just in the past 24 hours. The U.S. is putting out warnings about travel as well, evacuating non-essential staff from embassies and bases in the region. And so there's quite a bit of volatility now on the markets because of this situation, understandably. So the volatility index, the VIX index, has been up all day, pretty significantly, between 5 and say 8 or 9%. Climb on the volatility index. Basically what that is a sign of fear in the markets. Most of the futures trading that causes the volatility index to go up is typically short selling contracts that are hedging stock holdings and such. And so when we see the VIX spiking up, it means there are a lot of people hedging with short contracts potentially on the futures market, which is a sign that there's fear of a potential sell-off in the equities. And so we've got that happening right now, fundamentally being driven by fear of war escalation between Iran and potentially several other nations. And so not unexpectedly, that has an effect on crude oil price as well. So with that headline, we can take a look at a couple things. I've got the US 30, the Dow Industrials up, and we can see that since that news was breaking, let's say yesterday evening, we see a huge dip in the Dow Jones Industrials. Okay, so we see this steady drop, and that's a larger drop than we've seen in some time, because these movements have just been down and back up, down and back up, down and back up, really not breaking any support levels. in this image, the last time we had a move down like this was back here in late May. Okay, 29th of May, we see this come down with a movement that broke a support level here. Okay, since then, we've only seen upward climbs. So we see a support level here and then up further. Then we see a support level here and up further, like a staircase. We see a support level here and then up further. We see a support level here and then up further. None of these movements looking back, just stepping up, stepping up, stepping up, okay, until now. Okay, this movement is the first movement since the 29th, since late last month. So we're looking a couple weeks back. Since this area here, this is the first movement stepping up, stepping up, stepping up, stepping up, where we see it breaking that next support level, that next step in a downward fashion. So we've started a downtrend on these 2-hour candles that hasn't been seen for a couple weeks. Okay, so we now are in a downtrend here. And the question is, what's going to happen next with the headlines? It doesn't seem to be a situation where things are calming down, because the latest headline I just saw literally as I was walking in the room to do the webinar is the IAEA, the International Atomic Energy Agency, which kind of is the oversight for nuclear energy within different countries and nuclear weapons development, officially said for the first time in 20 years that Iran is in breach of the nuclear agreement. And Iran then responded, some of their leaders, saying, well, if that's the case, and you're saying we're not following the rules, then we're going to immediately build a new nuclear enrichment facility and speed up our enriching, which is the opposite of what was supposed to be happening with the negotiations. And so this is a situation that seems to be escalating, and as that happens, the equities are selling off. Okay, that's what we've seen on the US 30. We can also take a look, US 500, downward movement, not quite as dramatic yet, but we do see downward movement after the same sort of climbing. Okay, here was that downward move in late May, okay, breaking a support level down to here, and since then it's been upward movement, one step after the next step after the next step, and it looks like here we're poised to break into a downtrend as well on the US 500. Okay, it's close to breaking, and I could cheat this down a little and say here's the support level. Okay, support, support, support. This downward movement is absolutely being driven by the fundamental news that we talked about partially. Okay, and there was reason for good news yesterday. Inflationary data on the economic calendar out of the US, the CPI data is the lowest it's been in a long time. It was lower than expected, showing that inflation is really coming down dramatically in the US, increasing likelihood potentially that the US could start cutting interest rates again. And so all of that was positive good news yesterday, and we saw the major indices rising on that good news yesterday. And then here comes the headlines last night, late yesterday evening, depending on your time zone, about potential imminent escalation between Israel and Iran, and down go the equities trying to break support levels. Okay, so we're seeing similar movements on each of these US indices. And so again, this is a US Tech 100. There's that staircase up, up, up. Here's a support level, and it's pushing at the bottom of the support level. So none of these indices are trending up. They're all either breaking the nearest support level on the 2-hour candles, already broke it, or pushing, trying to break it. Okay, so there's a huge downward bearish type trend right now on the US equities. And then we can also look in other regions. So if we want to look at the DAX, okay, the German 40, we can take a look and see it's also being heavily affected in the downward sense. I mean, it already broke also a support level We even need to go to larger candles because this downtrend is so strong. Okay. As I scroll back, then you see in the 4-hour candles, look at this uptrend, up like a staircase going up, support level, up. Again, another step up, support level. Again, another step up, support level. And now all of a sudden, here it comes down with momentum, trying to break support levels. And it actually has already broken one support level here just today. Okay. There's a support here, technically speaking, where it hit and went up and was holding. And we just, over the past couple days, have come down towards it. And the current news has broken that support level. So this is a strong downtrend from a technical perspective. If I was going to trade on this, I would combine the fundamental news as I know it, fear, and a sell-off in the past 24 hours or 12 hours on the equities, the volatility index up, and uncertainty about whether there's going to be a regional war in the Middle East or not. Well, there's already been a war, but an expanding war, and what effect that could have on global energy supply, crude oil specifically, and what countries would be pulled into this potential escalation. And so we're looking at a broken support level. Fundamental news maybe says sell. So if we set that up in the sell direction, we can take a look and say this just broke a support level. From a technical perspective, this is a sell. Broken support level establishes downtrend. Perhaps the fundamental news also says sell, and if that's how you felt, then you go with the sell option. And then we're looking at take profit, could be the next support level down, which if I'm looking here, if it continues down, I'm looking at the next support level maybe here at 23,438. We see here on the 4-hour candles, it hit and climbed, hit and climbed. Here it tried to break that temporarily and went back up. So there's a bit of support in the past here. So if this continues down, I'm looking around 23,438 as a potential take profit if this momentum continues. So let's say 440. 23,440, just before that support level I was pointing at. We can put a line there. Okay, so 23,440 or so. Okay, right about this area maybe is a spot, if it does continue down, that you could think about taking profit if you were selling. Okay, stop loss, where would I put my stop loss here? If I'm doing a market sell, probably back above this broken support. If it goes back above this broken support, then the downtrend has ended and it's gone back into an uptrend. So somewhere above 23,755, so I'll say 23,760, back above that broken support for a stop loss. So willing to bail on the move if it reverses and becomes an uptrend again. Now that I have my exit points and entry points, I'm entering market exit point above the broken support if it goes the wrong way, or before the next support level if it goes the right way. So the technicals are determining the exact points where I might get out with take profit and stop loss, and the directionality is determined by the fundamental news. Okay, so now I just need to adjust my trade size for these price points. So if I want to risk, say, 1% per trade or 0.5% or 2%, then I can adjust my trade size now to be that amount. So let's say I want to risk about 500 per trade. So I adjusted half a lot. I can see I'm risking 544, which is a little more than 1% of my account, but almost exactly 1%. So 0.48 gets me down about 1% of the account, a little less. Almost exact. So, and there's nothing magic about 1%. You could risk 0.5%, 2%, whatever amount is right for you. But at least you know the risk management before you get started. And so now I see I can make over 1250, 1260, and risk about 40% of that, less than half of that. So if I'm right 1 out of 3 tries, I'm still profiting on this type of setup. And so if I like the setup, I like how it looks, then I can go ahead and make my move. Okay, so easily risk managed, using the current fundamental news as we know it to determine directionality, using the technical analysis to confirm that directionality with broken support level, confirming momentum on the downward side, and using the technical analysis also to confirm maybe where we might think to take profit if this does drop further, where it might have trouble breaking maybe the next support level. Not that it couldn't go further, but that's the first spot that we find on the technical side support. So a classic example of using fundamental analysis to determine directionality and technical analysis to kind of zero in on your entry and exit points. Now, we could have easily done that on the Dow Jones. We could have done that, you know, on any of the major indices really globally, because this effect isn't just occurring on US indices or European indices, etc. Okay, but I happened, as we pulled this up, to see that it just broke a major support level here. So it looked like a nice one from a technical perspective to go after this type of fundamental move in terms of directionality. But you have your options, obviously, in terms of major indices to take a look at. And maybe the US makes sense, US 500, NASDAQ, Dow Jones, because the US is more directly connected with this news and what's happening. Now, we also could then look at crude oil. Okay, whenever there's fear of escalated conflict in the Middle East, typically then crude oil spikes up. Okay, and that's what we've seen, breaking through these old resistance levels that I drew, confirming a strong uptrend. And now we see there's a bit of a lull, a bit of a pullback. So these are 4-hour candles. We could look at something larger, 1 day. Okay, and we see where this pulled back from, perhaps is an old support level, which it is. Okay, these are 1-day candles. You see this price point here. It was support in this area back here. It was support here where it had trouble at getting below, and when it got below, then it plunged. Then it became resistance. Then it became support again. These are all 1-day candles sitting on that price, sitting on that price, sitting on that price, and then it took momentum to get below it. Took a big event to get below that price. Otherwise, it sat above that price. So here we are hitting that price, and as soon as it hit that price, look at the sell-off, right back down. That's a technical sell, okay? The market sold at that price, not because all of a sudden there was good news about the conflict in the Middle East, not because all of a sudden there wasn't fear of supply disruption of crude oil. It sold here because it was a support level from the past, which acts as resistance once it's been broken below like it did here. So it's not a coincidence that that wick exactly touched this price and then pulled back. Okay, it happens often. That's technical trading. The move up was fundamentally driven, fear of war in the Middle East and supply disruption of crude oil. The sell-off was technically driven. So this tells me if we reach a technical support level, the fundamental news that drove the upward movement still exists. And so maybe you look for a price point that you look to buy on the war fears, okay? And so, you know, the news, what's funny is the news yesterday out of the US, you know, lower than expected inflationary data would bring the price down, right? It shows less demand in the economy, prices dropping faster than expected, CPI data lower than expected, and so then all of a sudden, the opposite with the war drums beating and crude oil spikes up, okay? And that's how quick fundamental news can change the situation. And so we see here a support level from the past, okay? This line here, look here on the 1-day candles. It hit and went up, hit this area, went up again and again and again right in this area here, okay? So what I see is a bit of support right in this range here, this zone here, where the price had trouble going below this price for weeks after weeks on the 1-day candles, okay? So if we come across to where's the price now, we're almost exactly at the top of this little zone that I drew, Okay, so if I think there's reason fundamentally for crude oil to go up, now we've reached a pretty major support level from the one-day candles from weeks back, then maybe I feel like, and here's that zone I drew, looks larger now on the 2-hour candles, right, compared to the one day, but this was the support area I drew, this zone here, from the one-day candles back further. So we see this came rushing back down, and now it's just sitting at the top of that support level. So again, the larger directionality is being driven by the fundamental news. The little movements up and down a lot of times are technical traders selling at specific price points and buying at specific price points based on the technical layout of the chart. But still then the larger movement, even with those technical buying and selling movements, the larger movement has been up, 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 up over the past couple days because of these fears. And so what we're looking at then now is, if you believe those fears are still there of war escalation in the Middle East and that will continue to drive crude oil price up, if you think the negotiations aren't going to go well between now and Sunday, between Iran and the US, and that potentially a war could escalate or break out, then probably you're in the direction of thinking crude oil will go up, not down. Okay, if the rhetoric keeps escalating like I just saw before I started the webinar, kind of a tit for tat back and forth between Iran and the IAEA and Iran and the US and Iran and Israel, if that continues, probably more fears will mount. So given that situation fundamentally, I'm going to try and trust this support level in this simulation and go for a take profit up towards today's high without even having to break the high that it reached in the past 24 hours. Okay, so then I take a look at the smaller candles. If I've decided, okay, buying is what I want to do, if I start looking at 15-minute candles, 5-minute candles, I see I'm sitting on the beginning of the support zone, and we start to see wicks where it's sitting and holding, but it looks like it wants to try and test this zone. Okay, but if you're looking at this zone as one big support area, because that's what the one-day candles showed us, because the one-day candles kind of showed support here and here and here, kind of within this zone when we looked back in time. So you treat this maybe as one price point, this zone. And so take profit then, I'm looking at 68.95. Okay, just before 69, I don't have to break the high of the past 24 hours. So 68.95. Although it easily could break the high if war escalates. I'm being conservative here with the take profit without having to break this high point. And then looking at the stop loss, if I'm buying, and I trust this support zone, then I want my stop loss below the support zone. So down here around 66 even would be below the one-day candle support that I drew. Okay, so 66 even is about $1 down. So I'm looking at potential profit 12,880, risk 7,770. So not quite 2 to 1, but much better possible profit than risk. And that's with having my stop loss clearly down all the way below that whole support zone, and the stop loss being here. So the stop loss is well protected, and it would take a lot of change in fundamental momentum for this to break this entire support zone and hit your stop loss down here. And to hit your take profit, it only needs to maintain the current fear. And likely this could push back up. Okay? So it feels like the fundamental news is more on your side here than it is against you. I anticipate it's going to test this zone, but perhaps be able to hold if the news goes the direction that it's been going the past 12 hours. Okay, so another option would be to put a pending order somewhere in the middle of this zone, wanting to get a better price. That would be okay as well. As we look at 5-minute candles, we see it is trying to downtrend a little, but having a little bit of trouble breaking this support area. So with the setup now, I can change my trade size because I've got my exit point here and here, my exit points for stop loss and take profit. I've got the price points lined up. I've got my directionality determined by the fundamental news. And now I'm looking at what trade size is right for me with these price points. So I'm working in reverse. I'm not setting up the top of the order window first. I'm setting up the bottom. I'm determining my direction based on fundamental news. And the technical setup is helping to determine my price points. Now I go back up and say what trade size is right for this trade setup. And so if I want to risk like the last trade around, and I'm making up the number of 1% of my balance, then I need to adjust the trade size. So this risks 520 with half a lot, which is a little less than 1% of my balance, to try and make near 2%, just under 2% of my balance. So this looks like an appropriate setup if that was my risk management goal, was to risk around 1% and go after something larger than that. And so if I'm happy with the setup, I understand my risk management, then I'm ready to go ahead and buy on the movement. Okay, so an opportunistic pullback here to pair with the fundamental news that in bigger picture is driving crude oil up, which is fear of war escalation in the Middle East. And so if you're bullish on the fundamental news for crude oil, then this is an opportunistic entry point above a nice support level. And if we want to look at that support level again, we go to the one-day candles. And we see, why do we consider this area support, where the price is right now? We follow it across, and we see that this was an area of support on the one-day candles, where for weeks it was trying to break below this price and it just couldn't do it. Between this line and this line, it had trouble getting below that second line. Okay, and so we come back, and that's where we are right now with the current price. So with the larger candles, sometimes you see the support and resistance levels, the price point's a little better than if you're on the smaller candles like 30-minute candles. Okay, we'll see if this tries to challenge the lower end of that support. I think it might dip into this zone, at least some. We'll see if the support holds for this trade. And honestly, all it would take is another escalatory headline, and we could see crude oil make a move like it did here. Okay, we'll see what happens with the headlines and with that movement. Now, what else can we do other than trading off of big headlines like we did just now? Okay, until now we're looking at the major stories that are going on and making moves. We also can trade off specific economic announcements. Okay, so we can look at the economic calendar, which is another type of fundamental news, and look at today's date and see, okay, well, what's going on the economic calendar. So if we go to the 12th, we can take a look. There are announcements that came in already. Not good news out of Great Britain. GDP numbers worse than expected. Industrial production numbers worse than expected. Both high-level announcements. Not so good. So there's reason from a fundamental perspective for the Great Britain pound to be a bit weak right now. And you start to think, well, the US dollar is a safe haven currency. When there's fear, the US dollar tends to strengthen. Not always, but it has that tendency as a safe haven currency. And so right now there's reason for USD to strengthen with fear of war, and there's reason for the pound to weaken. So you can start to put together pairings that might make sense. Trying to find a weak horse like the pound with these bad announcements, and a strong horse like the USD as a safe haven currency with fears of war. So you start to put these together and you say, okay, that sounds like a good pairing. Or maybe GBP against the yen, which is also known as a safe haven currency. So maybe there's fear about the US dollar because they could be involved in the war if it happens. And so maybe you look Great Britain pound against the yen. Okay, that could make sense. And so we start looking at announcements that already occurred and get in your mind that maybe I'll look at the Great Britain pound Japanese yen chart. Could be a good one to look at today because there's a lot of reason for the yen to strengthen. Fear of war escalation in the Middle East, and there's specific reason here for the pound maybe to be a little bit bearish. Okay, So we'll pull up that chart and we'll take a look. GBP, JPY. Okay, are we late to the show? Maybe a little bit. The pound is pushed down since yesterday. We see pushing down for the past, I don't know, 12, 24 hours and sitting on a support level. The support level I drew a while back, so it just shows you how the technical analysis, there's something to it. Even if you're a fundamental trader, you trade off fundamental news, look at this line that I drew maybe in the last webinar before this movement existed, right? And you see it was a support level then, and now you see even with the fear and the strengthening yen today, it's having trouble breaking past this area. It's sitting right on this support area just like it did earlier in the week. Okay, so now we look at larger candles. Say, okay, what's the bigger picture? Bigger picture is it tested this support level here. It temporarily went below and came right back up. So how would I look at this? I would say next support level down is here. This area here where it hit and went back up, had trouble dropping below this general location here, climbing back up once, climbing back up twice. So somewhere in this zone here, there's some support where the yen had trouble pulling the pound any lower. We're well above that still. And this support level was tested once. So I might say if this breaks the support level another time and drops below this wick, I want to sell, because then I think it might do like it did here. When it broke below this price, look how it shot down. So fundamental news says yen should strengthen as a safe haven currency. And those recent announcements that just came out today, industrial production, GDP numbers, bad, lower than expected out of Great Britain. So we have multiple reasons for the pound to drop, multiple reasons for the yen to strengthen against it. So this price point would confirm a technical breakthrough of this support level and then give you even more reason, even from a technical perspective, to sell. So setting up a technical breakthrough strategy to enter into a trade that's only in the direction that the fundamental news says this movement should go. Okay, so in this case, I'll say execute when price hits. If the price hits 194.65, that's this line here, then it will execute my sell trade. So sell, execute when price hits 194.65 would trigger the sell. Take profit right down here at this first support level might make sense to me. So without having to break the first support, 193.31, let's say 193. We'll even say 35, a little bit above the support level down there. Okay, 193.35, right about there's the take profit. Okay, without having to break the support, only entering if this breaks down and breaks today's low. Okay, hitting 194.65, which is there. Okay, and then what we see here then, if we do stop loss, if it breaks the support and it's a true breakthrough and it's going to do like it did here, then stop loss back above that broken support makes sense. If it reverses back up like it did this first attempt, then we get out with a small loss. So if it comes back up to where it is now, 194.90, it would make sense then maybe to bail on the sell. If it establishes an uptrend back again, if it breaks, hits our entry point, and then comes back up above that broken support, then we get out the small loss with this simulated setup. Okay, so the possible profit over 9,000, possible loss less than 2,000. Okay, this is a huge opportunistic type move that if it goes the right way, you have a really nice payout and you're risking very little in comparison. Okay, so now that I have the technical setup, now I can go ahead and adjust my trade size so I'm risking the amount that I'm comfortable with. Now, I also could look at this and say, you know what, I'll be even more patient with my stop loss. I'll put it at 95. Okay, why? Because I can. Okay, 194.95. Okay, which is right about there. Okay, so it would have to come back up even above where it is now in order to hit my stop loss, and I'm still better than 4-to-1 ratio. Possible profit to possible loss. And it only opens if it establishes this downtrend. Now I adjust my trade size. If I do 4 lots, I'm risking 836. If I do 3 lots, I'm risking 627. 2.5 lots, less than 1% risk on my balance. And I'm going after 4%, 5%, even higher potential profit on the account. Okay, it's better than 4% potential profit. All right, with a small risk, measured risk in the direction of the current fundamental news, but only if we get the technical breakthrough that we're looking for to confirm that downward momentum. Okay, so we're all set up with 2.5 lots. Sell. Okay, now I said sell, but it didn't actually sell because it's a pending order. So it's here in the orders, waiting for a confirmatory move. If it hits the trigger price, then it sells. Okay, here's our entry price, the trigger price, below the support level, waiting for the fear today from the fundamental news to break the support and trigger our sell. Hopefully we get this type of move then and head towards our take profit. Here's our take profit line. Okay, so everything's here for you to see, and you can drag these lines and adjust the setup as well. The entry price, the stop loss, take profit, you can adjust those at any time before the trade opens. Okay, and after you can still adjust, obviously not the entry price, but after the trade opens, you can come and adjust the stop loss and take profits right here from the chart. You just click and drag to adjust them. All right. Okay, any questions, comments? I do see one question that has been there for a little bit. You ask the USD index is going down for now, or I guess it wasn't a question, it was a statement. Yeah, the indices in general have been bearish with the fears of escalation of war in the Middle East. Doesn't mean they'll continue to drop for sure. We just know the fundamental news is that situation right now. It's creating bearish pressure on the indices, on the major indices around the world, not just in the US. We see it on the chart. It's not just something that we're speculating about. We can see the downtrends. The only question is, will they bounce back up before falling further? Will they maybe not fall further because maybe the negotiations get back on track? We don't know that for sure. But what we can do is see what's happened already, see what is the situation right now, and then do our best to trade off of the current momentum, the current fundamental news as we know it. And we combined that with the GBP JPY with the fact that there were some bad announcements on the economic calendar just a few hours ago out of Great Britain. So the economic calendar, another type of fundamental news, economic announcements, can be very helpful. And we saw these numbers here, expected to be flat GDP, and it was negative by 0.3. So it went from positive 0.2 all the way to negative 0.3. That's really bad. Okay, industrial production was expected to drop by negative 0.2. It was almost as bad as the prior number, negative 0.6. So a double whammy here on the Great Britain pound. So no wonder we see it trying to break support levels against a safe haven currency like the yen. Okay. Now we can go and we can look at announcements that haven't happened yet. And real quick, I'll show you how you could trade off of these announcements as the numbers come in. So the PPI data, purchasing price index, it's a sign. It gives a reflection of what's going on with prices and inflation. Just like the CPI data, the consumer pricing index yesterday showed a dramatic drop in inflation. Perhaps the same thing can happen here. Yes, maybe no. So we'll see what the producer prices, those that are making the products, what are they paying for their materials? And so let's look at the volatility tool surrounding this announcement from the past. And we can use any US dollar pairing that's listed here. We can look different time frames after the last announcements for the PPI data. And so this goes back over the past months and quarters, okay, into the last year, showing us what has happened as the numbers came in the past with this currency pairing. And so if this comes in above forecast, showing higher inflation than expected, in the past, 100% of the time, the euro climbed in the hours following that announcement. That's pretty powerful information. It happened 5 times that these numbers came in higher than expected. And in the 4 hours following each of those announcements, the euro went up against the USD with an average range movement of nearly 50 pips. Okay, so if I'm trading off this announcement, I'm probably sitting and waiting. When the numbers come in, if they're higher than expected, if I can get a good entry price in the first, say, 5 minutes, okay, in the first 5 minutes, these, some of them went down. The ones that went up were, the average range movement in the first 5 minutes was only 11 pips. None of them were up even above 15 pips. They were down at 10 pips and less. And some of them were down even 10 pips or more in the first 5 minutes. But after 4 hours, all of them were up. The euro climbed in those 4 hours after each of those announcements every time. It doesn't mean it'll happen this time, but this is the data that we can use to trade off of announcements after we see the numbers come in, okay, to trade with the statistical analysis from the past. Now, what if this comes in below forecast? Okay, less convincing, isn't it? Half the time it went down, half the time it went up. We had 2 that went up strong, 2 that went down pretty strong, and 1 that stayed basically flat. So it's as close to 50% as you can get with 5 data points. Okay, 3 went up and 2 went down. Okay, this isn't something I'd want to trade on. The past announcements show me that the movement is less predictable when it comes in below forecast compared to when it comes in above forecast. So with this, not interested in trading with that data set showing, but if it comes in above forecast, if I can catch a low point in that first 5 minutes or so, or it doesn't go up much, I know in the past I can expect about a 50 pip range movement on average, ending in an upward direction, okay? This one going 54 pips up, the smallest one finishing 5 pips up, and the rest somewhere between 5 pips and 54 pips. So the average range movement in total was near 50 pips. That means some of these went down before they went up. And that's what we saw in the first 5 minutes. Downward spikes, and in the end, all of them up. You don't often see 100% data, but we see it here. If you try a strategy like this on, in this case, PPI announcements, or in yesterday's case, the CPI data out of the US, or if you were ready to trade on the GDP data out of Great Britain that occurred earlier this morning, whatever the case may be, you're not going to win every time. So don't give up if you try it once and you take a small loss. You try each of these announcements 10 times each. They're repetitive each week, each month. It's the same announcements over and over. And see after trying each one, say 10 times, which ones were you profitable from? Okay, maybe all of them, maybe none of them. But if you play it well, you can see in the data that you probably could be quite profitable percentage-wise, win more than you lose. And so you can identify that after a number of attempts, which announcements you trade best off of, have the best percentages and profits from, and then zero in on those as part of your set of strategies moving forward. Okay? And so there's a lot of opportunity with these announcements out of lots of different areas. Australia, the Asian country announcements, Great Britain, European Union, etc. Okay? All right, everybody, that's a good place to stop, I think. We'll see how these trades get moving eventually. We've got one up into profit, one that's hesitating, and one we're waiting to see if it'll trigger, and it really looks like it's trying to break that support level right now. I think in the next hour or two, this trade will probably open. This may be our best setup out of all of them because I really like the pairing between the weak GBP with those announcements that came in bad and the yen as a safe haven with all the fear that's out today about war. So it's a really nice pairing. I think we'll see how that turns out, as well as the other moves that we simulated. All right, everybody, thank you for joining. Have a good rest of the week and a good weekend, and I'll be back at it next week, same times as this week. Wednesday, 7 p.m. UK time is the technical analysis webinar, and today's session, obviously, same time next week as well. All right, everybody, bye for now. Good luck with the trading.